Well, thank you very much, Beth, for that warm introduction. It's very much my pleasure to be here at Walt Disney World once again at this conference. And I shared with this information a long time ago with my colleague, Beth, that I was once an employee of Walt Disney World. But of course, if any of you are familiar with the employment practices, you're really not an employee, you're a cast member. And as a cast member, you're always on stage. And I thought, wow, what a cool idea. And they said, you know, customers were not customers, they were guests. And they said, you know, guests are always right. And then there was this long pause, and then it said, unless it came to money. And then Disney was always right. But it is my pleasure to be here again, to be among this group, to discuss ideas about improvements in our marketplace. You know, when I arrived here last night, it was a little chilly for me, it was 63 degrees, and I noticed the difference between the Floridians and the Northerners. The Floridians had scarves and jackets and boots on, and the Northerners were in the swimming pool. And I thought that was a little strange, but then I remember when I used to treasure coming to Walt Disney World, hearkening from the Northeast, how happy I was to be in Disney at 60 degrees and jumping in the swimming pool. You know, Florida has great weather going for it and low taxes, but that's not the only thing. It has a very positive business environment, and that business environment has a lot to do with the fact that our insurance industry is operating on all cylinders in a very positive way and is contributing to our growing economy. I want to take a moment, as CFO Atwater has indicated, that Florida has really come a long way in many, many areas in the property and casualty market. I'd like to point out that the CFO deserves a great deal of credit in his role as a legislator, as a senator, as the member of as a CFO, has been in the thick of all of these reforms, as you know. And we can remember not that long ago when Florida comp rates were among the highest in the country, and it's hard to get businesses to move to Florida when your comp rates are 1, 2, or 3 in the country. Not that long ago when Florida was taxing its citizens through the cost of fraud in our PIP system. And all of us will know very clearly how dysfunctional, but just a few years ago, our homeowners market was, and how necessary it was if we were going to revitalize and to have a new market and not rely so much on a market of last resorts. But today our markets are much more robust, and they're much more competitive. And they're probably the strongest they've been since I have been the privilege of being the insurance commissioner of the state of Florida. This is welcome opportunity for our consumers, but it's also a welcome opportunity for our economy of Florida, because the state is in a sense very stable. Florida is once again a place that's open for business and is welcoming companies by saying it's okay to make a profit and it's okay to have more products, which is better for consumers of Florida. But best of all, Florida continues to grow. It's absolutely amazing that we, 800 people move to Florida a day. We have recently eclipsed the states of New York as the 3rd largest state in the country. And if you listen to the governor at the inaugural presentation, he said that we're going to pass Texas as the #1 state for job development in the country. Now, I think Texas takes exception with that characterization, but I have a lot of confidence the governor is very dedicated in moving forward with that charge. In short, Florida is a great market for those who are interested in investing in Florida because there's a broad, growing portfolio of insurance investment opportunities. Moreover, I cannot think of another state that does more to ferret out fraud, prosecute fraud, investigate fraud as vigorously as our state does. And I want to thank our fraud division and CFO Atwater for his leadership in this regard. All of this bodes well, I think, for the future of Florida. You know, the Florida insurance industry is not only an integral part to the engine of commerce, but it's also an integral part in our economic well-being of our Florida. It employs hundreds of thousands of employees. It provides tens of thousands of additional employees in the form of agents. There are $12 billion in compensation accounts for about 2.3% of the economic development of our state. Because of this impact, it's really been an important part of our office agenda to make concerted effort to attract new insurers and new additional capital to Florida. And by fostering an environment of a stable regulatory environment that would increase opportunities for companies that are here. These changes have accelerated our speed to market for products, has promoted job growth and insurance, and have encouraged companies to add new lines of business. Florida's leadership among the states in achieving market stability and transforming good ideas has shown by the number of new investors that have come to Florida. Since 2003, we've had an additional 25% new companies coming to our state. As a matter of fact, Florida has now the third largest title insurance writer, Old Republic Title, now re-domesticated from the state of Minnesota to Florida. Now, I do want to remind you that it was 14 below zero in Minnesota when the chairman of the board made a decision to move to Tampa, but I like to believe it had to do with a strong, fair regulatory environment that the state of Florida has to offer. We do have an environment that is growth-minded. We do have a political environment that says we're open for business in Florida. For example, Florida no longer does just regular market conduct exams like most other states. Ours are risk-focused. We look at environmental scanning. We look at troubled companies, not companies that are doing the right thing. We work with the legislatures to see what we can do to eliminate unnecessary regulation, unnecessarily filings. We work with the Financial Services Commission to eliminate old rules, redundant rules, rules that are impediments to companies doing business in Florida. We have also implemented a combined filing form, which has reduced filing time by 21% in the state of Florida. The state of Florida was the first state to innovate an open portal so that all form and rate filings, your F filings, your Form F filings, your Form A filings, can all be done electronically. Through these and other measures, we continue to save insurers time and money when they're doing business in our state that ultimately is passed on to policyholders. The cost of regulation in the state of Florida per $1,000 of premium has dropped 48% from 2008. That's $1.33 then to 69 cents in the year 2013. Just because we're saving money doesn't mean we're doing it at the expense of our consumers. For instance, we have worked very closely with our CFO and our Attorney General and the office to spearhead a national life insurance settlement process to return tens of millions of dollars to Floridians and billions of dollars across the nation. The office is also set out to protect seniors from unscrupulous sales practices, and most recently, the office has achieved a landmark agreement ensuring that people who are living with HIV and AIDS have access to affordable health care and medications. Turning to the property market, as the CFO has indicated, it's been a long time since we've had a storm. Thank God we haven't had one make landfall, but we've also had some major changes in our environment in Florida that has made it a much better place to do business. While certain segments of our market are not as competitive as we'd like them to be, there was a few outliers like Monroe County and some of the barrier islands. We are in a much better position than we have been in a decade. Let's look at the reinsurance savings and how homeowners' rates are being reflected. I know this is a matter of particular interest to the CFO to make sure those savings are passed on to policyholders. Well, in some cases, that money is. We've seen that money passed on to policyholders. In other cases, that money is returned and built into the surplus. And in other ways, we have seen them purchase more reinsurance. We look at these as all ways of ensuring and protecting policyholders that the company has the financial wherewithal to pay claims in the event of a catastrophe. We're going to continue to work with the CFO to look at reinsurance cost reductions in the future and to see that those rates are being passed on to consumers when appropriate. We will also work to make sure that other risk transfer mechanisms that are out there are utilized by our insurance industry. We want to encourage companies to use alternative risk mechanisms whenever they can and it's appropriate for their company to improve and to reduce the cost of doing business in Florida. Nowhere is the impact of the changes in the marketplace more dramatic than if you look at Citizens Property Insurance, and I want to commend President Gilway for the great work he has done in depopulating Citizens. There's about 600,000 policies. I don't think 3 or 4 years ago anyone's wildest dreams would ever think that Citizens would be of that size. That's a dramatic 56% reductions in policies in just 3 years. And we've approved 1.1 million policies for takeout and another 400,000 policies this year. This turnabout is nothing short of remarkable, and it has a very positive trend for us going future. The office engages in a very critical analysis when we look at companies participating in depopulation programs. We look at whether or not the company has a viable business plan, has appropriate strategies for underwriting, that the policy selections and geographic distribution meets with their reinsurance and risk transfer. We run stress tests on the company. We make sure that they can actually keep the policies that they take out. Our office will continue to carefully scrutinize this because we know that this is a subject of a great deal of public scrutiny. We do know that there are some additional non-cat losses. I know there's a subject of that as part of our discussion here this week, that there are now increasing non-cat losses, particularly in South Florida. It's important for us to continue to monitor what's going on to make sure that if there's necessary changes we need to make in legislation to continue to make a competitive environment in Florida. One of my primary regulatory responsibilities, of course, is to ensure that companies have the ability to pay claims, to make sure that they are solvent and in a position to pay claims even in the event of a large disaster. To make that case, the office has been conducting over a series of years annual data reinsurance calls, where we're employing a new tool, which the CFO had recently mentioned, as we are providing a series of stress tests, where we ask companies to go through various scenarios of hurricanes through repeated multiple events to look at how we perform as an industry, but also how individual companies perform and its ability to absorb those losses. A great deal of time and effort is spent on this initiative, and it provides the office with a great deal of information, valuable data, information that will help the policyholders. We also share that information with our companies so that they can help them better purchase reinsurance and make important choices to ensure that they have the ability to meet the consequences of the stress tests. As the Federal Reserve has observed, public disclosure of stress testing promotes accountability, supports market discipline, and provides better investor information in the future. And we want to work with the CFO to look at ways to better educate the public about how prepared we are to deal with the financial stresses of a catastrophe. As I've said many times, and you've heard me say this many times before, I'm very proud of our 59 domestic Florida insurance companies and their dramatic success story. They write the majority of business in our state. They have strengthened their financial positions and their claim-paying capacity from $5.4 billion surplus up sharply from $3.3 billion just a few years ago. They are writing more business, but more importantly, they're expanding in other states and they're diversifying their portfolio. We do hear about the companies that fail. This is America. Companies do fail. If you look at insurance compared to banking, hundreds of banks have failed. We rarely read anything about it. But I want you to know that the strength of the Florida marketplace is very good, and we feel comfortable going forward. Regrettably, some news story want to focus on our domestics as thinly capitalized, one storm away from insolvency. Not only is this misplaced, it's just plain wrong, but it's also accompanied by this pitch that somehow the better solution is for the government to solve the problem. Nothing could be further from the truth. This reflects a fundamental misunderstanding of how markets work, how pricing works, and how capital flows. The state of Florida should not view citizens as an insurer of first resort or find ways to socialize more risk by inviting more government. We should let the private capital evaluate and properly price risk, subject to the appropriate regulatory approval and oversight to prevent excessive, inadequate, and undiscriminatory or unfairly discriminatory rates. Otherwise, we're going to miss on this opportunity, this great opportunity we see before us, driving more and more private capital out of the marketplace. We are in a position we have never seen before in Bermuda and London, across the world, in terms of investment opportunities. Huge changes are taking place in Bermuda that are transforming the pricing and transforming how we do business. Traditional insurance is now in the emergence of the insurance-linked securities have dramatically changed the marketplace, and we believe will benefit the Florida domestic market. I call your attention into 2010 when we issued our informational bulletin encouraging our insurers to look beyond traditional reinsurers and look at the dynamic marketplace and other tools that are available. Not one size fits all, but there are an array of products out there that could help diversify your portfolio. We have worked hard with our leadership in industry to enhance and reach the scope of the marketplace for Florida companies. The trend is towards a more diversified range of options and new sources of capital. We also hope and encourage the growth and maturity of alternative markets will offer additional opportunities for the Florida Cat Fund. I know that the Chamber has been very concerned about the potential of a tax on all businesses if we don't do something to reduce that exposure. And I know Dr. Nicholson and Ash Williams are investigating opportunities, and we encourage them to do this. ILS market offers great opportunities all over the country. We've seen it at work in other states, and we would encourage it in our state as well. Florida, of course, is not an island. We have to rely on what's going on in the rest of the world. I just want to briefly touch on is that there's a lot of activities going on, whether it's through the Financial Stability Board or the International Associations of Insurance Supervisors, that are having an impact on how we do business in the state of Florida. There is recently the Financial Stability Board made a determination of whether or not reinsurers should be considered systemically risky. If they determine to be systemically risky, they're going to require reinsurance companies to hold higher capital requirements, different policy measures, which could jeopardize the flow of capital coming into our state. Our state has been involved in working through the NAIC on a number of initiatives to provide some checks and balances to the encroachment by the international community on setting standards that affect Florida businesses and insurance companies doing business across America. I'm encouraged by our discussions. I think we have a long way to go. I'm encouraged that we, as standing together with the Federal Insurance Office and the Federal Reserve, that we will not have a system that's overly prescriptive, that frustrates the development of capital and does detrimental impact on the consumers in Florida. At any rate, we stand ready, willing, and able to work with our colleagues to continue serious business of preventing a global capital standard that we think is unnecessary, because we have not seen any evidence that a lack of capital was the genesis of the last financial crisis, and there's no case to be made that the U.S. regulatory system failed in any regard. 2014 has been a great year for insurance. Property casualty markets are strong. Legislative reforms, much promoted by the last several years of efforts of the Chamber, have really transformed our market. Looking ahead, I'm excited about the prospects of the markets, the growth of infusion of capital, and of course, No one knows what the future holds, but I know this much. One storm is not going to change Florida marketplace. Our companies are stronger than ever. The reinsurance market is stronger than ever. In the midst of the many opportunities, I hope we can continue to work together on providing the unlimited potential of more capital to come to Florida, improving the regulation, smart regulation, efficient, effective regulation, but most importantly, expanding choices for our consumers. And it would be remiss of me if I didn't end by saying, have a magical day. Thank you very much.